Venture capital, VC, is a form of private equity financing that provides funding to startups and early-stage companies with high growth potential. In exchange for funding, venture capitalists take an ownership stake in the company and become active investors in its operations. In this article, we will explore how to find venture capitalists, the pros and cons of using venture capital as a funding source, and other important information to know when dealing with venture capitalists. How to find venture capitalists. Finding venture capitalists can be challenging, but there are several ways to identify potential investors. Networking. Attend industry events and conferences to network with venture capitalists and other investors. This can help you build relationships and gain insights into the types of companies and industries they are interested in. Online platforms. There are several online platforms, such as AngelList and Gust, that connect startups with investors. These platforms allow you to create a profile for your company and pitch your business to potential investors. Referrals. Ask other entrepreneurs, mentors, and industry experts for referrals to venture capitalists. This can help you get introduced to investors who may be interested in your company. Research. Conduct research on venture capital firms and individual investors to identify those that invest in your industry or business model. You can also look at their portfolio companies to see if they have invested in companies similar to yours. Pros and cons of using venture capital as a funding source. Venture capital can be a great source of funding for startups and early-stage companies, but it also has some potential drawbacks. Here are some of the pros and cons of using venture capital as a funding source. Access to capital. Venture capital provides startups with access to large amounts of capital that can be used to fund growth and expansion. Strategic partnerships. Venture capitalists often bring more than just funding to the table. They can provide strategic advice, industry connections, and mentorship to help startups grow and succeed. Validation. Securing funding from a reputable venture capital firm can provide validation for a startup and help attract additional investors and customers. Loss of control. Venture capitalists typically require an ownership stake in the company in exchange for funding. This means that founders may need to give up some control over the company's operations and decision-making. Pressure to perform. Venture capitalists have high expectations for the companies they invest in. They may require regular updates on the company's progress and may push for quick growth and profitability. Dilution of equity. As the company grows and raises additional funding rounds, the ownership stake of the founders and early investors can become diluted. Other important information to know when dealing with venture capitalists. When dealing with venture capitalists, there are several important things to keep in mind. Due diligence. Venture capitalists will conduct extensive due diligence on your company before investing. This may include reviewing financial statements, market research, and other documentation. Be prepared to provide detailed information about your company and its operations. Term sheets. A term sheet is a document that outlines the terms of the investment. Review the term sheet carefully and negotiate any terms that you are not comfortable with. Board of directors. Venture capitalists often require a seat on the company's board of directors in exchange for funding. Be prepared to work closely with your investors and communicate regularly with them. Exit strategy. Venture capitalists typically expect a return on their investment within a certain time frame. Be prepared to discuss your exit strategy and how you plan to provide a return to investors. Conclusion. Venture capital can be a great source of funding for startups and early-stage companies with high growth potential. However, it is important to carefully consider the pros and cons of using venture capital as a funding source and to be prepared to work closely,